more diversity of deals to come across your desk, because you're going to have opportunity to not just go for deals that you would find if you were just looking on your own, but you can go out and basically target into other operators and figure out the best operators and align yourself with those operators. And then you get a much wider array of types of deals, and you get to basically pick the best of the best deals to invest in because you have that capital available. It gives you a lot more negotiating power, I think.
Evan, we're both in this business, and we already know who's new as opposed to who's experienced. So we have an easier time parsing through partners. If I have to know you for a year and really have a great relationship for you. So we have a lot more insight into the business, as far as not in a good or bad way, but like we can parse through things a little bit more efficiently than we would if we were new into the business. Even as a passive investor, know who you're going to be marrying for the next 3 to 7 years on a particular deal. All right. So end of the day, if you have a good relationship, Evan, if I have a good relationship with you for the last year, you bring me something, I might be more reluctant to say yes. It's just like how we partner with passive investors. Usually it takes a year to form some relationships. And sometimes it takes us a year to build relationships with JV partnerships. So we're not just going out here willy-nilly and investing with anybody that brings us a deal. We're parsing through those hundreds and hundreds of deals through our contacts and through the deals that we got through the brokers that we're kind of parsing through as well. So we're making decisions and we know how to weed them out efficiently.
Yeah, I love that. And I think too, it gives you, like you said, also the other benefits are you can pull the trigger more quickly on deals. It just gives you a lot more power negotiating that too. And then also it allows you to diversify and your investors to diversify with just having that 1K1 instead of, I mean, that's honestly, I get that question a lot with investors. They're like, hey, when, like before they invest, they're like, can you give me some sort of guarantee, or at least give me a timeline of ahead of time of when I'll get my K1. Because a lot of investors, the more K1s you get, the more troublesome it is. And you usually have to delay your tax return. And it becomes this ordeal of like, hey, when are all my K1s going to get in? So having that clarity of just, hey, 1K1, it makes a big difference.
It allows your accountant to know that all these investments are tied to this deal. Yeah. And whether it makes it easier or harder for them, they know that they can get all the financial forms they need for those investments in Fund 1, right? So Fund 1 has 5 investments. Great. They get all 5 of those. They go ahead and generate 1K1 for all the investors in the fund. It sounds, we know that that's one of the biggest pain points for investors.